like to say that receipts equal cash because it's all based on what you keep track of. Type that in the chat. Receipts equal cash. Receipt equal cash. Type that in the chat. And a lot of you may not even be thinking like a business owner just yet. And I say that because this past weekend, we spent some time with some of the royalty members in Atlanta at the royalty retreat, where they invested in themselves to come out to a retreat. We had fun. We created some memories. We got to know each other. We created a lot of content that we're going to spread across the timelines for as long as we possibly can. And it was a business expense because it was business travel. We were able to stay in a nice home. So we had the royalty retreat at the mansion in Atlanta. So we had a great time and created some good content that's going to yield some returns on investments and make us some money. But I know that everybody is not quite thinking like a business owner just yet, because I just said the receipts equal cash. Well, when we were cleaning up the mansion, the Airbnb, I noticed quite a few receipts that I end up passing to the trash. Now, if it was my receipt, I would have put it in my wallet, put it in my pocket, because I understand that receipts equal cash. But if you leave a receipt when you were conducting business or on a business trip, it lets me know that, okay, they don't understand the power of these receipts yet. And there's no shot at you. I more so took it to heart as maybe I'm not doing my part of making sure that they understand that if you're in business, in pursuit of making a profit, if you're growing your MyEcon business or any side business that you're involved in, and you're not tracking your expenses or your receipts, then you're leaving money on the table. You see, a lot of people think when they make money under the table that they don't have to report it, and they look at it like they're getting over on the IRS. I often tell people who are barbers or beauticians or anybody who typically earns cash or get cash apps, or they definitely don't see themselves recording that income. I often tell them, yeah, you can make that money under the table and it might seem cool like you're getting over. But what if I told you that you were missing out on up to 400 tax deductions by not claiming that income? Because the income you do not claim is the income that you cannot claim tax deductions on. So a lot of people fail to realize that. So I want you to think more like a business. So that way you decide, okay, I'm going to spend this money anyway. How can I get a piece of this money back? You see, they call money currency for a reason. I mean, it's meant to flow. And you should be thinking about making money circulate and come back to you, not just spending it and it's gone forever. A lot of people just spend money. See, we got to even twist up our terminology. A lot of people just spend money. Spend, the last three letters in the word spend is end, meaning that you spend and your money comes to an end. But when you circulate your money, you expect it to come back. When you treat it like currency, you're expecting it to come back. In other words, if you spend money or you find a way to make whatever you're about to circulate your money on be tax deductible, you're finding a way to get it back. You might not get it back right then and there, but when it's time to file your taxes, the money that you spent January through December, portions of that is coming back to you because you got it in the tax deduction. So I want you to be thinking about the money that you are using and circulating and figuring out, okay, how can I make this activity or this expense that I'm about to incur tax deductible? When you start thinking like that, that's when MyEcon starts to get inside of you. Everybody's in MyEcon who has an active membership and a username and password and can log in and access the My Credit system, etc. But not everyone has MyEcon in them. When MyEcon gets in you, you think different. You think about, okay, if I'm about to swipe this card, how does this tie into being a business expense? How can I make this tax deductible? Now, not everything is going to be tax deductible, but it's so many things that a lot of people sleep on that can and should be tax deductible if they knew how to make it tax deductible. So that's what I want you to be thinking about. And then the same will be true as in other areas. It may not be something that you're about to buy, but it might be like, okay, I was able to save this amount of money for whatever reason, whether it was you save money in travel, you save money in, debt elimination, you save money in interest, you made some extra money. You're thinking about it like, okay, how can I grow this money? Another way to circulate your money is to invest your money. So how can I grow this money? And when you're thinking about using your money as a tool, as a seed that can produce a later harvest, and understand that money itself is not the end goal. So many people chase the bag. That's just the seed, so you can turn that into more money. Cash, asset, cash. You want to take whatever cash you're bringing in, put it in some type of asset that can bring you in more cash, or put it towards something that can be a tax deduction that will then later bring you more cash that you can put into an asset and grow. So I want you to get MyEcon inside of you. Coming to these trainings is what allows you to get MyEcon inside of you. So let's talk about it. These common tax deductions. And this is available in your back office, but I'm gonna make it simple for you. So I'm gonna zoom in just a little bit. It said this information is an introduction to potential tax deductions for business owners. Responsibilities come with the deductions. MyEcon has a detailed system to teach record-keeping requirements and to help associates understand how these tax deductions can put money into their pockets each year. Every business owner needs this information in training. So that was pretty loaded. I know it just seemed like a simple paragraph, but it wasn't. First sentence, this information is an introduction to potential tax deductions for business owners. We say potential because we know some people are just playing around with this thing. Some people are doing business and it's really like a hobby. You just kind of playing around. But it's other people who are serious and they're going after it. So they turn their potential into a definite tax deduction. So it's a potential tax deduction for business owners if they're serious in pursuit of making a profit. And when we say serious, we're not saying that you're working this thing full time. They understand that people have side businesses. And you can qualify for all of the tax deductions by having side businesses as well. They just want someone who is in pursuit of a profit, meaning that they want to be profitable. They're not in it just for the tax deduction. They're not in it just for the social network. They're in it to be profitable. So you get potential tax deductions as a business owner. Now, the second bar, responsibilities come with deductions. It's not just, I get to write off, everything right off my lifestyle. That's true, but the responsibility is the record keeping, and we're going to dive into that towards the end of this training. The responsibility is in the record keeping. And MyEcon makes it simple because we have a tool known as the Cashflow Manager that allows you to keep track of your records. It's IRS compliant. You're able to save it every single year, print it out, do what you got to do in order to position yourself to maximize your tax deduction. But that's the second bar in this one small paragraph. MyEcon has a detailed system to teach record-keeping requirements and to help associates understand how these tax deductions can put money into their pockets. See, MyEcon doesn't base their success about how much money the company generates. The company was debt-free 16 years ago, still debt-free today, so you can only imagine how much money MyEcon has been able to generate. But the key is what they just said. They're trying to show associates how to understand these tax deductions can put more money into their pockets. They're trying to put more money into your pockets. So if you ever find yourself like, I don't want to pay this monthly membership, you already failed. You already didn't understand what MyEcon is about. The person who quits MyEcon is the person who does not understand MyEcon, because MyEcon's whole objective is to put more money back into your pocket, not take from you. The monthly membership is laughable in comparison to the value that you get from it. MyEcon, whether you make a dime in MyEcon, is putting more money in your pocket from the education, from the debt elimination, from the credit increase and the interest that you can save. Like literally having better credit, if you're planning on purchasing a home, might save you $100,000. That's worth paying your MyEcon membership up for the next 5 years. Just that alone. So it's not about the monthly membership and MyEcon just collecting. No, the objective of MyEcon is to put more money back into the associates' pockets, which is why when they talk about, MyEcon is a debt-free company, technology driven, and they ended with it's help associates increase their cash flow by over 500 million. That's how they scale their success. So I want you to understand that. And then it says every business owner needs this information and training. I want to highlight that because sometimes what people do is they think that, I don't want to share this with this person because this person doesn't work a job. They just have a business. This person is self-employed. They don't have a W-4. They can't benefit. MyEcon shows you how to put 6 cash flow streams back into your pocket. Every business owner needs this information and training. You would be surprised how many people who are in business and some do it very well and don't have a clue of how to maximize their tax deduction or their terrified to even try to maximize their tax deduction. And the more money they're making, the more they're actually being taxed. So you mean to tell me you're making great income doing business and you're okay with paying almost 50% in taxes? No. If the government is not your business partner, then they shouldn't be getting 50% of your earnings. So you better figure out a way to maximize your tax deduction. So even a business owner can benefit from MyEcon. Many of them don't understand the simplicity of restoring their credit. Our system gives them the ability to do that. So even a business owner can benefit from MyEcon. A lot of them don't understand cash, asset, cash, and how to take that cash and grow that cash via investments. MyEcon positions them to better understand investments so they can grow their cash. And now they'll start thinking different. They may be in business doing something else. It may be real estate. It may be, whatever it is. It's a list of different businesses they can be in. It may be their barber, a beautician, or they may be into apparel. You get to thinking different. You get to realizing, oh, maybe I can be invested in the industry that I'm building. I mean, maybe into driving trucks. You might be able to look deeper and say, oh, maybe I can invest into the industry that I'm building. Let me look on the back end and see who owns the companies that I'm circulating my money with. So if you're in the hair business, you may be able to look up the ladder and see that you might need to be investing in some of these companies. See, it just gets you to thinking different. And a lot of business owners aren't thinking that way. So MyEcon can benefit the business owner as well. All right, let's proceed. So commonly used deductions and how they work. Business expenses are the cost of carrying a trade or business. If you're in MyEcon and you're building this with the intent to make a profit, that fits you. These expenses are usually deductible if the business is operated with the intent to make a profit. Y'all probably already heard me say that 5 times. To be deductible, a business expense must be connected with or pertaining to your trade or business, or be both ordinary and necessary. So you want to make whatever it is you're doing attached to something business related. For those who came to the retreat, everything that you did, the fact that you were away from home, was pertaining to business. So if you went and bought food, you need to be trying to accumulate, those tax deductions. Figure out how much you spent so you can get those tax deductions. Whatever amount you spend to be there, the travel, the miles, etc., all of those things were ordinary and necessary. Another thing as it relates to being ordinary and necessary, people who have online business, yes or no, type it in the chat. Is it necessary for an online business owner to have some type of internet connection? Yes or no? If the answer is yes, then that counts as ordinary and necessary. How could you possibly have an online business without internet connection? If you're paying for internet, there's a good chance you need to write that off as a tax deduction. In this day and age, is it necessary for you to have a cell phone and be in business, regardless of what business you're in? Absolutely. It's ordinary and necessary. So some of you may be paying your phone bill, you shouldn't be paying it in full. It should be partially tax deductible. And the more business you do, the bigger chunk you can write out, up to 100% in tax deductions. It's ordinary and necessary for people to use their vehicle to go out and build their business, go out and do some networking, go out and pass out business cards, go out and travel to events. So it's a lot of different things that fall under the ordinary and necessary category. An ordinary expense is one that is common and accepted in your trade or business. A necessary expense is one that is helpful and appropriate for your trade or business. So if you can think from that angle, a lot of things tie into being ordinary and necessary. An expense does not have to be indispensable to be considered necessary. Let's proceed, just so we don't spend too much time. Business versus personal expenses. Generally, you cannot deduct personal living or family expenses. Generally, whenever you see this in the code, it's setting you up for a benefit. When they say generally, you cannot deduct personal living or family expenses, you're like, okay. However, when you say that word, however, say however in the checks. However, when they say however, they mean they finna tell you how to get to the bag. See, a lot of people fear the IRS, and they're like, how the IRS. Last time I checked, the IRS provided the most information on how to pay less in taxes. These come off the IRS website. So if the IRS is telling you how to pay the least amount of taxes, why are we thinking that the IRS is the bad guy? I'm starting to flip my perspective. I'm gonna be honest with you. Mm-hmm. See, I've been taught that the IRS was bad, but you just gotta know how to play by the rules. Now, if you don't play by the rules, I'm sure you don't want no problems with the IRS, but we're using their information, playing by the rules, and they're teaching us how to keep more of our money. So, however, if you have an expense for something that is used partly for business and partly for personal purposes, divide the total cost between the business and the personal parts. You can deduct as a business expense only the business part that meets the general business deduction rules of being an ordinary and necessary business expense. So what they pretty much just said is this. They said, generally, you can't claim off or write off personal living and family expenses. However, if it's something that you're using partially for business, yeah, you get the business portion written off. So it's a lot of people who are using their cell phones, and yeah, they might communicate with their family, but they're also making posts, they're also making memes, they're also making content, they're also recording, they're also sending messages out to prospects or business partners. They're also doing all of these things on their phone. So yeah, part of it might be to just so people can get in touch with you, contact your family, call your kids, let your kids call you, whatever the case may be. But a big chunk of it is you running this and using this as a business. You got to get in the habit of using your devices and platforms more for business. I was reading something earlier. A lot of people use social media just to scroll, just to stay relevant and post about family and laugh and hee hee and ha ha. Since we've been in business, we ain't been using social media for play. It's always been serious. It's always been for business, for us. And I want you to get in that same mindset because it positions you to get more of your tax dollars back. It positions you to be more profitable. So I want you to use these tools and resources that you have, at your fingertips, so that way you can maximize your tax deductions. So here's some common tax deductions. We're not going to go over all of them, but when they say some of the things that you may be able to write off might also be in conjunction with personal living expenses or family expenses, here's what we mean. You're probably already using transportation some way, shape, form, fashion. You probably already have expenses associated with your car or your vehicle. Okay. How about you make a portion of that tax deductible? You're probably already traveling to some degree. I don't care if it's a staycation or a vacation. If you connect business to those things, you're able to write portions of that off as a tax deduction. And being that we have a travel membership attached to ours, for those of you who have the elite business membership, you position yourself to make your travel 100% tax deductible. Why? Because now not only are you traveling, you're using your own product. You have to be a product of the product or test out your product and use the product, but you also have the ability to put somebody else in position to write their travel off or get access to the travel membership so they can save up to 70%, positioning you to write up to 100% of travel. Meals and entertainment, we're going to scratch out entertainment because they started to take that away due to people overutilizing it. But for meals, guess what? If you're eating food and it's in conjunction to your business, tax deductible. So when I found those receipts in Atlanta, it was meal related. That was a tax deduction. You might have to go find your bank statement or whatever you got to do in order to get access back to what you spent on meals, but you don't want to be throwing those meal receipts away. And I'll tell you why a little bit further. Reason being, and this is another reason, we got 3 more months to get, well, I'm going to say that. I'm getting ahead of myself. So I'm going to stick a pin in this meals right here because we're going to go over that. Then we're going to go over just briefly home office expenses because these are things you're already spending money on anyway. And then we're going to talk about other expenses and the rest I won't bother with. However, just want to let you know there's a ton of different ways to get tax deductions. You just need to know a strong few. You don't have to know them all. Just know a strong few. We're not going to talk about the gifts, but we will tap into transportation just briefly. So transportation expenses include the ordinary and necessary costs of all of the following. Getting from one workplace to another in the course of your business or profession. We talked about that briefly, but basically if you do business in between your job location and your home, portions of that can be tax deductible. Going to a business meeting away from your regular workplace, visiting clients or customers, getting from your home to a temporary workplace when you have one or more regular places of work. So it's always ways to make the lifestyle that you're currently living tax deductible if you just understand how to do it. Now, they have different ways of things that you can write off. You can write off standard mileage or actual car expenses. I say keep track of both. And then when you get with your tax professional, they'll let you know which one is going to be the most beneficial to you. We were always told that the mileage is the best bet to go because of different reasons. I don't want to confuse anybody, but for different reasons, especially if you drive quite a bit. Sometimes standard or actual car expenses can benefit others, but mileage is pretty beastly. And this is what I mean. So the standard mileage rate 2021, and this is showing 2021. But the standard mileage rate for the cost of operating your car for business use is 56 cents per mile. So what that means is that every 2 miles that you drive, you get $1, a little bit over $1, $1.12 for every 2 miles that you drive. So if you're gonna drive those miles anyway, if you're not writing it off as a tax deduction, it's almost like you're throwing money out of the window. Because while you're driving your vehicle, if you're not in pursuit of a profit or doing business, and I'm driving my vehicle and I'm in pursuit of profit, we drove the same miles. I just got to write mine off and offset my tax liability. So that's important. And that number changes every year. Sometimes it's 57 cents, sometimes it might be 51 cents. It's usually over 50 cents. But that number changes rapidly. This is how you get some of your money back. You know, we went through a big segment and still going through a segment where gas is higher than it should be. Find a way to get your money back by making sure you're doing business some way, shape, form, fashion. Make the activities that you're doing more tax deductible. And here's some examples of some actual car expenses that you might want to just keep track of just to see which ones are going to be the best ones for you. Depreciation, license, gas, oil, tolls, lease payment, insurance, garage rent, parking fees, registration fees, repairs, and tires, just to kind of give you an overview. So I won't go too deep into the actual car expenses, but I am going to touch on travel. If you temporarily travel away from your tax home, you can use this chapter to determine if you have deductible travel expenses. This chapter discusses traveling away from home, temporary assignment or job, what travel expenses are deductible. So this is a good segment because it talks about how to make travel tax deductible. Being that we have a travel business attached to our system, it increases the chance. So it's not even talking about somebody who's in the travel industry. So you have even more than what they're about to explain. But I'll talk a little bit about, and this is specifically for those who just left the royalty retreat and for anybody else who's traveling abroad. It says traveling away from home. You're traveling away from home if your duties require you to be away from the general area of the tax home substantially longer than an ordinary day's work. You need to sleep or rest to meet the demands of your work while away from home. So everybody who was at the royalty retreat, this fits you. So everything that you did associated with the travel, you need to be writing it out. Whether you spend hundreds of dollars or over 1,000, whatever you spent. I don't know, for some, y'all spent even more because you had to fly. Some of you had to pay extra for a flight because of, some mishaps that took place. Investment in yourself. You got to understand that. You spending money, don't shy away from spending money or, it's going to cost me this. Okay, you're going to wish you had spent that money to attend that event or book that trip or do whatever the case may be, because when it's time to file taxes, would have been an extra $2,000 you had in tax deductions. But you missed it just by, thinking a little limited. I'll just say that. Let's keep going. So they talk about the different travel expenses that you can deduct. I'm just going to read on the left side, and you pretty much know how this operates. So transportation, that's travel by plane, train, bus, car between homes. So that could be Uber, Lyft, whatever the case may be. All of that falls under transportation, obviously. Taxis, commuter bus, airport limousine, that would be possibly the Uber too, but long story short, tax deductible. Bagging and shipping. Some of you pay for baggage. You might not have thought about that as being tax deductible. Absolutely. Shipping. Some of y'all left some stuff at the mansion. You had to ship it. You better believe we're writing that off as a tax deduction. They're saying we shipped about five or six items yesterday. Tax deductible. Your car, we talked about that. Lodging and meals, tax deductible. Cleaning, if you're doing dry cleaning or laundry associated with your business. Telephone. Tips, even tips if you're out of town and you're at a restaurant and you tip. Write it off as a tax deduction. And then other things that are ordinary and necessary are tax deductible as well. Let's proceed. We're not talking about entertainment because they did change entertainment. This is something I want to highlight right here, because I said we had 3 months and I told you stick a pin in what I was talking about as it relates to meals and entertainment. So right here it says you can no longer take a deduction for any expense related to activities generally considered entertainment. Somebody messed that up. They used to do that, but probably all them people going out and playing golf and writing off everything under the moon. Some people writing off, the strip club, etc. Some people messed up that tax deduction, but you used to be able to write off entertainment as long as it was associated with the business. Now it's other back end ways that people go about doing it. But you can no longer write it what's generally considered entertainment, amusement, or recreation. You can, however, continue to deduct 50% of the cost of business meals if you or your employee are present and the food or beverages aren't considered lavish or extravagant. So they're saying just do what you normally would. Don't overdo it, just do what you normally would. Now, this is a bonus, and I've talked about this before, but a lot of people don't realize the power in this. You can deduct 100% of your meal expenses if the meals are food and beverages provided by a restaurant and paid or incurred after December 31st, 2020, it's right now, and before January the 1st, 2023. What does that mean? Why is that important? Okay, right now we're in this window. It's past December 31st, 2020, and it's still before January 1st, 2023. And they're allowing you to write off not just 50%, which is the typical amount, but 100% of your expenses or meal expenses. So let me get this straight. If I'm doing business and I'm present and I go grab some food at a restaurant, whether drive-through, pickup, delivery, whatever the case may be, but I ordered it from a restaurant and I connect it to my business, I can write off 100% of that meal. That's pretty significant. You can't even write off your groceries. Sometimes eating out has its benefits, has its perks because it's associated with a restaurant. You're patronizing another business. And what the government is saying is, okay, since you're patronizing another business, that's helping that other business. You see, the government is strategic and pushing you in the direction of what they want you to do. I know some people drew back from going out to eat, but they're like, okay. For the people who business minded, they understand tax deductions. If you continue to go out to eat and patronize these other restaurants and businesses because everybody's going through some things, we'll give you 100% of a tax deduction. Gotta listen to what they're saying without, without overthinking it. Sometimes people think that we haven't been given opportunities, but these are big opportunities. We just got to know how to grasp them when it presents itself. So you can deduct 100%, but you can only do that up until December the 31st, 2022. So it has to be before January 1st, 2023. So we still got 3 months to maximize how many deductions you can get from meals solely, as long as it's business related. I'm gonna leave that right there. Do what you want to do with it. All right, keep going. Uh-oh. Let's see. Screen jumped on me. Let's see. I must have clicked on the link. Sorry about that. Hold on. Told you this was directly from the IRS website. I clicked on something that was clickable. It took me directly to the IRS talking about the per diem. And that's a whole nother deduction. So I told you, we're not making this stuff up. You can tell it's real because I accidentally clicked on the document and it took me to the IRS website. But MyEcon is positioning you to win. That was just, an accidental proof of what I mean. All right. See, where was I? It was on meals and entertainment, interest. Okay, perfect. But we're not going to talk about the interest. But basically what it's saying, I'm gonna just brush over it just so you know that you're legally liable if it's a debt that you have incurred business related. You can write off the interest associated with it. Look deep into that. Also, and this document is available. You just press for time, so I want to make sure you really get a thorough understanding. Family employees. Now, I said I wasn't gonna talk about this that long, but hiring your kids is a big deal. And depending on what the standard deduction is for that year, you get to write off up to that standard deduction. I believe now it's $12,000. $12,000 per child is like $1,000 per month. You're probably gonna spend a decent amount of that on your kids anyway. But if you can find a way to incorporate their activities into your family, household, home-based business, you get to write it off as a tax deduction. And payments for the services of a child that's under the age of 18 who works for his or her parents in trade or business aren't subject to Social Security or Medicare taxes, not just one, but both. If the trade or business is a sole proprietorship or a partnership in which each partner is a parent of the child. See, a lot of times people tell you to just jump into an LLC. And sometimes people jump into an LLC and they don't fully have it set up so they're really getting taxed like a sole proprietor. It's not, they don't have all of their articles of declaration in place. And it's a couple of different things. Don't get me wrong. LLC has its perks from a protection standpoint. So I'm not knocking anybody who says something about LLC, but it's a lot of perks that come with having a sole proprietorship as well if you maximize it. Now, you have to know what you're doing in order to know whether or not you need to have an extra level of protection, because certain industries definitely you want to do it. But in the nature of business that we're in, which is online marketing, network marketing, and using online platforms, it's a little less legal things that we have to run into. But this right here is perfect for a person who's a sole proprietor, who has children, and you want to figure out a way to make some of the money that you're spending on them tax deductible. Has to be done a certain way. That may be for future training, but I just wanted to brush over that because sometimes people fail to realize the power that they have by having this home-based business. This right here talks about the business use of your home. And we're going to give you an example of how to track these records here shortly. The Queen is going to take it away and show us how to make this happen in real time as it relates to tax deductions, the how-tos of claiming and writing off your expenses, the back end side of what makes your business IRS compliant. I'll say that. So we're going to show you that. But business use of your home, certain percentages based on, say you got an office space, say it's a certain percentage of your home, that's the percentage that you can write off on your business office. I'm looking for one more in particular, and then we'll wrap. I'm not going to talk about depreciation. I'm looking for other expenses. Other deductions. Oh yeah, bring that up to them. All right, so this is the last one I'm gonna go over. I'm gonna highlight all of these, and then we're gonna wrap. Let me make sure there's nothing else underneath these. Kind of give you some vision of what you truly have access to. Deduction of qualified business income.
A lot that y'all could be reading up on.
Absolutely, and if you understand, if you know how we operate, all of this is content.
Yeah.
You see, we got a lot of stuff that we have you to do or repeat, and it's the simple stuff. You can take a nugget, a highlight of anything that I've said or anything that's on this sheet and turn this into a piece of content. And now you're showing up as the expert on your page, on your platform. They're sharing your content. They're looking at you like, this person knows what they're talking about, because you turned this information into content. And then if you follow our lead all the way, you might be getting paid for that content. So you're getting paid even before somebody joins your business. The gift that keeps on giving. All right, so other common expenses. MyEcon fees. Tax deductible. Why cancel your membership fee when it's tax deductible and showing you how to put more money back into your pocket? Bank fees. Tax deductible. You go take money out of the ATM for some business related, you definitely need to be writing off that big ATM fee that they're starting. That ATM fee is starting to jump. It seemed like it used to be 50 cents here and there. Now it's like $3-4 every time. Write that off on your taxes. Tax preparation fees. So if you charge for tax prep, tax deductible thing, especially if you're a business owner, your business had to file taxes. So it's a fee that you had to pay. Make it tax deductible. No matter how big the tax preparation fee, okay, you might have needed that tax deduction. Make it tax deductible. Supplies. What are you spending money on? That could be tax deductible, whether that's ink, whether that's paper, whether that's folders, whether that's you investing into your team, whatever the case may be, write it off. Business education. See, when you invest in yourself, they pay you to further your education. If you're in college and you do further education, that's one thing. But when you're in business and you further your education, now you get tax deduction. And business education is seminars, training, physical meeting courses, royalty retreats, ebooks, all of these things. So even if it was something that we had and we were like, it's not free, but okay, you should be like, thank you for the tax deduction because I'm writing this off on my taxes. So make sure that anything that you buy that's furthering your education, making you more sharp, increasing your value, you're writing it off as your tax under taxes. Retirement investments. So anything that's retirement investment, something that they want you to be investing in long term and pulling out on the back end, IRAs, the IRAs, simple IRAs, SEPs. Some of these are tax deferred and allow you to get tax deductions from it. That's very important because some of you investing in 401ks and in some of these categories, you didn't know that was a tax deduction. I saved somebody a ton of money. I filed their taxes earlier this year, and they didn't know that they could write off some of their investments in their retirement accounts. If it wasn't for that, they probably would have owed or got a lot less back. I was like, hey, how much have you been putting into this? They told me. I did the math. I said, okay, that's this. How long you been doing that? They told me, okay, added it all up. And the taxes came out great because I understood I had the knowledge that they didn't have. So it's way more than tax preparation. And your typical tax preparer won't have that information. They won't even know how to tell you that you qualify for these things. They're just putting in data. You have to have extra information so you can better your situation. Smartphone services, internet access, as we cover, printing, webinar fees. So if you're paying for something like Zoom, which we're on right now, we pay for Zoom, it's tax deductible. So if you need to be hosting meetings and you have a Zoom, go ahead, tax deductible. Business mailbox fees, we got a PO box, tax deductible. Legal fees, whatever it is that you have to pay legally, tax deductible. And advertising, that's a big one because it's limitless on how much money you can spend in advertisement to grow your business, whether you buy a business card, paying for online ads, whatever you got to do, it's all tax deductible. And it's over 400 tax deductions. I just gave you about 20, give or take. So I hope y'all got something out of this. And just understand, this is an ongoing conversation. When I first started hearing about tax deduction, it was way over my head, way over my head. Then I started keeping my records like the queen is about to show you here shortly. Then I actually filed my taxes and I saw the benefits of, oh, me single with no kids at the time with $6,000 in tax deductions, just lower my tax liability. And not only did I drop into a lower tax bracket, I got a larger refund as if I had kids. Powerful. Tax deductions are powerful. And if you implement and use these tax deductions, then get that cash flow up, then you use that extra cash flow to invest. Then you'll understand that tax deductions literally can help you build wealth. Don't shy away from it. Don't run from it. Just get educated on it because the person who understands it more gets more comfortable with it. And the more comfortable you get with it, the more generational curses we can break from no longer having that lack of knowledge. Queen, you ready for them?
Yes, make me an admin real quick.
All right, I got you.
All right, y'all, if you got value from what Marcus just showed you in the back office, I want you to put in the comments, wow. Just say, wow, if you learned something new, okay? Wow. Miss Cheryl, I see you said, where do we find that sheet? I actually posted that earlier in the comments when he first started talking. It's document number 601. Document number 601. You get there by logging into your MyEcon back office, click on Document Center, and it is under Training Support Materials. It is the very first document. Okay, I'm looking at the chat. I see Yvette must be attempting to make a profit. Absolutely, absolutely. Yvette said, and I need high speed. Okay,
that's right.
All right, I see y'all. I see y'all. I see y'all. Yvette is always just mind blown on these trainers. She's always learning something new. All right. So have you made me an admin?
Yes.
All right. I see all the wows. Y'all. Okay, cool beans. You gonna mute out over here?
Yeah, I'm.
All right. So y'all. All right, so I'm gonna take over the second part of the training. I'll try to make it as quick as possible. But like Marcus said, when we first got started with MyEcon and we were learning about the tax deductions, it went a little bit over our heads. We were like, okay, I get what you're saying, but how do I do it? Like, what does this mean, right? And y'all, basically anything associated with business. Number one, okay, first I want to hit y'all with a pop quiz. Do y'all know the number one reason why a lot of businesses go out of business? Do you know what one of those number one reasons is? And we're not talking about, lack of money. We're not talking about them just not knowing what they're doing. It is associated with taxes. But do y'all know the number one reason? I want y'all to just guess. What is one of the number one reasons associated with taxes that businesses go out of business? Okay, Yvette said can't pay taxes. Okay, that was a good guess. But I'm gonna tell y'all, I'm gonna just go ahead and jump out and tell y'all. Oh, tax fraud. Look at Janetta. Don't track it. Yeah, there we go. There we go. Record keeping, y'all. It's record keeping. Y'all gotta understand. Look, I know we give y'all a lot. I know we give y'all a lot of education. We give y'all a lot. But trust me, y'all, it is all for your greatest good. We want you to be successful in business. We don't want you to make the same mistakes that Mr. and Mrs. Smith make. We say this all the time. We speak from experience. Yes, we're in our 30s, but we've been involved with MyEcon for 8 years. We take advantage of everything that MyEcon has. And look, I'm gonna even throw it out there. We've been audited before. Yes, we have been audited before as well with some of the things that we've written off on our taxes. Here's the thing. I've been audited before joining MyEcon. Then we got audited again. after MyEcon. And I'm going to tell you, all the IRS is looking for. You don't have to be afraid of the word audit, which is why we're just going to go ahead and get that out the way. Audit, 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 right? Don't be afraid of that word. The only time you should be scared when you hear the word audit is if you know you lying. Okay. If you know you lying, if you know you're not keeping good records, then absolutely, girl, you should be scared. Okay. But with us, we had so much posture when we got those letters in the mail about being audited. Why? Because we were keeping good records. When you are audited, I don't know if it's just like a system thing. Literally, y'all, it's billions of people in the world. They ain't just coming after you, right? They just want you to do one thing: prove why you wrote off what you wrote off. If you wrote off $20,000 in deductions, okay, can you prove to me? Can you, scan a copy of those records? Show me how you got that $20,000 numbers. And if you can do that, that's it. Okay, that's it. All right, so what I'm gonna show y'all really quick, I'm gonna share my screen and I'm gonna show you how you write things off on your taxes. If you can see my screen, I want you to put a 5 in the chat. Put a 5 in the chat. Got some 5s coming through. All right. All right. Now, everybody should be familiar with this app right here. Let me go back. Let me go. There we go. Everybody on this call should be familiar. If you've been involved with MyEcon, especially for more than 48 hours, you should be familiar with this app right here. It is in your welcome steps. It is on the royaltymovement.com. It is on your MyEcon website to download the apps. This is called the Cashflow Manager, guys. It is a free app that you get included in your MyEcon membership. If you do not have this app downloaded, go ahead and download this app. You can go through your MyEcon website to get it, okay? Your login information is the email that you use to join MyEcon. The email that you use, and then your password is the exact same password as your MyEcon website. So your email and password, not your username and password like your MyEcon website, okay? So let's just look at it. You have the Cashflow Manager. You have the Cashflow Strategist. The Cashflow Strategist is our debt elimination, our budgeting, and our retirement tool, okay? I personally don't recommend doing the Cashflow Strategist through this app. I just think it's more comfortable and it's easier when you do it from a computer, a laptop, a tablet. Then you have financial tools. The financial tools are pretty cool. If you want to play around with some numbers, you want to look into like a one-time lump sum investment. What that basically means, say you have $10,000 or you come up off of, say you get your tax refund, you already started going through the MyEcon steps, you're debt free, you have your emergency fund established and you're ready to start investing and you just want to play around with some numbers. Let's say you have a $2,000 refund and you don't want to blow that. You want to see, hey, what could possibly happen if I just invested the whole 2,000? Put it in here. Put it in here and play around with the numbers. So this app has a lot of features, but the one that we're going over right now is the Cashflow Manager. Now, the very first thing you're going to notice we have different businesses here. What I love about the Cashflow Manager, y'all, is that you can put as many businesses in here as you want. So, for example, say you're not even running MyEcon as a business right now, but say you have another business, say you have a real estate business or you do hair or something like that. Put the name of that business in here and you can use the Cashflow Manager to track all of those expenses, okay? So this is for any business and you can track as many businesses as you want. Just hit create like I have up on my screen and put in whatever that business name is. We're gonna go here to the Royalty Movement. That's where basically how we track all of our expenses for us personally. This is what it looks like, guys. You can track all of your income in here, okay? Because keep in mind, the Cashflow Manager is also a budgeting tool. You have your income. You can create a budget for yourself. Viewer edit income, viewer edit expenses, enter new expense, capture receipts, your mileage tracker. If you just have unassigned receipts, you just want to stay on top of your receipts, take pictures of it and organize them later. You can do that, okay? But every single time you spend money on something associated with your business, you are going to click enter new expense. Enter new expense. Now, let's go from top to bottom. If you look at this drop down button, there are already some what's the word? Pre-recorded expenses already in here, pre-titled, pre-installed, however you want to say it. And as you can see, these are all things that you can write off on your taxes. If you don't see exactly what you're trying to write off at the time, there's even an other at the very top, create custom expense type. You see advertising, you see business training and consulting. A lot of the things, oh yeah, we added that one. A lot of the things that Marcus just went over. Dues and subscriptions, which is your MyEcon fee. You have your equipment maintenance. You have equipment, internet, utilities, licenses. Say you take it a step further and you go become a tax preparer and you get licensed to, do some other things. That can be written off as your tax on your taxes, okay? Meetings and seminars, renewal fees, mortgage payments, all of that is in here. Now I'm going to do some real life examples here. I'm going to do the royalty retreat. I'm going to give y'all two different examples, okay? So first thing, I'm just going to put that under, you know what? I'm going to put it under meetings and seminars. Meetings and seminars. Okay, we can even put it under travel if we wanted to. You think I should put it under travel?
Yeah.
Okay, so let's just put it under travel. And as you can see under travel, there's even subcategories. Was it the airfare, gas, oil, and repairs, lodging? So we'll do travel and we'll do the lodging, okay? Now the date can be either the date of the retreat or the date that you paid it. I say go with the date that you sent that payment, okay? So I'm just gonna put September 16th in here. Enter the amount. Well, y'all know it was $400 per person. Who? Okay, now in this example, we're gonna do Airbnb because that is basically where we stay. So the who is always who you paid the money to. Now I know you sent the payment to me and Marcus, but we sent the payment to Airbnb. So we're gonna have y'all to just do Airbnb under the who, right? The what is it for? So turn it into questions to help you get a better understanding. What is it? What is it for, right? And this is where you can write the Royalty Rapid Growth Retreat, right?
And make sure when you answer that what, you're kind of answering what makes this a business expense.
Exactly. What makes this a business expense? That was good, babe. The where. Where did the retreat take place? In Atlanta, Georgia, right? Okay. Then look at what it says. Assign receipt image. When you click assign receipt image, you can either pull it from your library or you can open up your camera. I'm going to open up my camera. Let me turn it around. And I already have up an example. This is a payment that King Lami sent over to cover his retreat. Y'all, we basically sent all of these payments via Cash App, right? So you can go directly back to your Cash App where you sent that payment or you sent multiple payments, right? And just put the total in there. And you see how I have up this screen on Cash App? All I'm going to do is take a picture of it. Oops, I got my flash on, but y'all get the point. Oh, okay. Now, I'm going to retry. Let me turn my flash off real quick. I really want y'all to get this. There we go. All right, make sure it's a good, clear picture. And I'm just going to hit OK. Now look at what happens here. And I hope it does it live. Keep in mind, since we're live, sometimes it can act a little funny. There will be a little bitty thumbnail image of that receipt on here. I don't see it right now, probably because we're on Zoom. There we go. All right. So just went a little slow. That's what it's going to look like, a little thumbnail image. And then the one in yellow is the one of that Cash Out payment. It's already selected. In the notes, okay? Y'all see I'm under that. There we go. I'll scroll up so I don't confuse anybody. In the notes, you want to be as detailed as possible. So I would put something like, because it's basically just stating your case a little bit further. What makes this tax deductible? So I'm just going to do Royalty Rapid Growth Retreat. I'm going to put the dates in here, which was September 23rd and 24th. I'm going to put a team building event. right? Team building event, content creation. You're going to put as many details in here as possible. This is to jog your memory, as well as, again, I'm going to bring it up again, y'all. If you're ever audited and they say, well, what was that $400 expense? Because keep in mind, a lot of the times when you are audited, it's not the same year. It may be, I remember when y'all, we got that notice in the mail that we were being audited, and it was for like 2 or 3 years prior to the year that we were in. And I'm sitting up here like, oh Lord, with my bad memory, I'm trying to remember what everything was for. But luckily we had a lot of notes in here. So it was easy to kind of jog my memory. Say it's 2 years later and Yvette is audited. Well, when she goes through her cash flow manager and she looks at all of her receipts, and if her notes are good, she's gonna be like, oh yeah, I do remember. Back in September of 2022, we did that event. Oh, it was so much fun. We had a mansion, right? Okay. If you drove in, look at this, your beginning odometer, your ending odometer. I'll give an example. Jamesia, you know, her and her family drove from Tennessee to Georgia, and they drove her car. They didn't get a rental. They drove her car. It was a few hours away. Well, Jamesia, go back into your Google Maps. See what the mileage was. How many miles was that from where you live to that address in Mableton, Georgia? And all of those will be considered business miles, right?
Absolutely. And since we know a little more about that story, not only that, the miles that your husband drove in addition, because
Yeah.
y'all had to actually accommodate for you to be there. The hotel that he booked so for him and the kiddos, they had to accommodate for that. So all of that, Queen, you make sure you're writing that off as a tax deduction.
Absolutely. All right. So you have your business miles. Now, if you didn't drive, like for example, Lami, he didn't drive, he actually flew in. So I'm going to erase the business miles and just do that $400 payment, right? And then, and you can actually create a separate entry for mileage alone if you want to actually pull the numbers, right?
Talk about recurrence just briefly.
Yes, I'll talk about recurrence real quick, y'all. Recurrence is something that literally reoccurs every single month that is tax deductible. For example, we pay for Zoom every single month. We can go in here and we can put Zoom into our thing here. We can put the price, and if we select occurring, it's going to ask us, is this weekly, bi-weekly, monthly? We'll hit monthly, and now every single month, the cash flow manager will automatically put the Zoom payment in here. And all we have to do is approve it. So when we log in, it'll say, hey, did Zoom come out again this month? Hit approve or hit confirm. And it'll automatically do that for us. This would be the same with our cell phone bill, something like that. That's the exact same amount every single month. We know we're doing business. We can set that on recurring. Bet y'all didn't know that, right? Then what you want to do is you want to hit save entry. I'm gonna save it. Make sure we go into cash flow manager and delete it. Okay, I'm gonna hit save, and then look at what it says at the top. Please confirm the entry to finalize. I'm gonna hit confirm. And entry is successfully recorded. Very, very simple, right? Let's do another one. And this time I want y'all to engage, okay? I want y'all to engage. I'm gonna do enter new expense. All right? So when I do enter new expense, I'm trying to write off the trophies that we awarded you guys at the Royalty Rapid Growth Retreat. If I click that drop down box, who can tell me what expense type this is? And I'll scroll through these slow. If you see it, just unmute and scream it out, or you can put it in the chat. Okay, Miss Cheryl said gifts. Not quite.
Good guess.
Good guess, though.
We'll tell you why that's not it.
Anybody see it? Somebody said supplies. Somebody said meetings, other. Okay. I love the engagement here. All right, babe, give it to them.
All right. I personally would go with supplies.
Ding, ding, ding. Good job, Shani.
So shout out to Queen Shani. I would go with supplies. It was part of our supplies as it relates to the royalty retreat, amongst other things. And the reason why I wouldn't do gifts, because gifts have limitations.
Yes.
It's only a certain amount that you can write off in gifts. However, when you buy supplies, there's no limitations on how many supplies you can buy to contribute to your business or to contribute to your team or whatever event that it is that you're putting together. You can write it off up to 100%. So supplies for these trophies.
Absolutely. All right. We went and picked up the trophies on September the 20th, right before we left out. The amount, $147.19. Who can tell me what goes under who? Who can tell me what goes under who? Who did you pay? Good job, Bree. Good job, Bree. Who did you pay?
Right.
Exactly. So we paid Discount Trophies of Arkansas, Inc. So we're typing it up. Basically, all you're doing, y'all, is typing up exactly what's on the receipt. What? All right. And I'm just gonna, for the what, I'm gonna type in trophies. What was it? What makes this tax deductible? Right?
Say team trophies.
Team trophies.
Trophies for the team.
Okay, we'll put more details where? In the notes. Where? Who can tell me what I should put in where? You watching the chat? I know I'm typing it in.
Somebody said ATL, somebody said the location of the vendor.
Oh, who said that?
Bree on it.
Good job, good job, good job. Great job, y'all. All right. So if you notice, I'm still typing, right? It's because I am typing in the full address of this spot, right? I'm getting it directly off of the receipt, and I'm going to show y'all the receipt right here. When I hit assign receipt image, I'm going to open up that camera. And here is our full invoice for the trophies, right? I have it right here. You see, even on here, they put Royalty Rapid Growth Retreat. I have the small receipt. We have the detailed invoice. I'm going to make sure I hold my camera where you can see a good, clear image. More than anything, I want this receipt because it shows you where we actually paid. You can see the Visa number. You can see everything. You can see the address. You can see the date. You can see literally everything. So more than anything, I want this. And this is just good additional proof. So I'm going to make sure I'm holding my phone. I got my flash on where I can take a good, clear photo. Look how clear that is. Do y'all see that? So I'm going to hit OK. Now, while we wait on that image to load, in the notes, give me some things that I can put in the notes. What are some things that I can put in the notes? If we were to look back on this 3 years later, what would be in the notes to kind of jog my memory and remind me why this was tax deductible? Give me some things for the notes, y'all.
It said team trophies for Rapid Growth Retreat.
Yes. Keep going, y'all. Keep going. Keep going. Team trophies. Yes.
22 MyEcon conference.
MyEcon conference. Okay, that's a good one.
Awards for team. Yep. Royalty team retreat. Yep.
Nice.
Content creation. Yep. Definitely incorporated some content creation with the trophies.
Yes, absolutely. So y'all get it. Y'all get it. Absolutely. So what I wrote was awards and recognition for team building event, MyEcon cash flow conference. Okay.
Like Sonny said, it's real subtle, but I read deep into it. Rapid Growth Conference 2022, which means
absolutely.
A future.
I heard that.
Go ahead, Sonny.
Absolutely. Now check this out. The odometer here is a little bit different because this is our mileage from our home to discount trophies in Arkansas.
Round trip.
Okay, round trip. That's the odometer there and the odometer back. So see, before I submit my taxes, we're gonna go back in and put in the odometer. We're gonna look that up because this was in another city, right? We drove from North Little Rock to Little Rock to get the trophies, right? Then we have to make it back home. So we're gonna put all of that under business miles.
Then we did it twice. So
Then we did it twice.
So we went there to make the order.
Yep.
Came on back home, but then when it's time to pick up, we had to go there a separate time. So you got to factor in all of these things, whether you're marketing your business or you're just making travel that might consist of multiple trips.
Absolutely. All right. This one, is this one going to be set up on recurring? Can somebody tell me, is this a recurring expense?
Yes, no, maybe so. What we looking like?
Tell me yes or no in the comments. No, Yvette said no, absolutely not. Girl, you ain't buying trophies every month, right? So no, we're not going to do recurring. And that's it, y'all. We're going to hit save. We're going to hit confirm. And that entry is in there. Now on the cell phone, I'm just going to see if I can pull up. Check this out. When I hit view expense log, you can put the dates in there and you can see literally all of the things that you've put in here. I'm going to go here to the one that I did for Lami, and I'm going to delete that so that I don't forget. But it's that easy, y'all. And so I'm going to show you what happens. Now, on your cell phone, it looks one way. On a computer, it looks totally different. When I go back to view income or expense log, right? And it's on expenses right now. We can hit categorize. Look at how it looks. And it looks so sleek on a computer. So I'm just showing it to y'all. Look, everything that we put in so far, well, just some of the things this year, like dues and subscriptions right here, already categorized. Can y'all see that in bold? I'm trying to highlight it for you. You see that? Total dues and subscriptions. So far in 2022, from January through now, $179 in dues and subscriptions is what we've logged. If I scroll down, home internet, $75. I definitely got to update that. Yeah. Meals and entertainment, so far we've put in about $100. Supplies, $206. So it's different things that we put in there. We haven't put in any mileage. It's going to be a full layout, y'all. And this, my friends, is what your tax preparer is looking for. MyEcon is positioning your tax preparer to absolutely love you, right?
Not just your tax preparer. Not all tax preparers are created equal.
This is true.
They got to understand the write-offs that's associated with a home-based business. Your tax preparer will lose you money. Just the tax preparer alone.
This is true. This is true. Let me rephrase that. This will make your record keeping flawless.
Yes.
Flawless. Y'all, it's going to pull it up in a spreadsheet on a computer. And once you get everything in there, you can print this out. On the right-hand side, everything is going to be categorized. You're going to have thumbnails of all of your receipts. You print this out, you hand it into your tax preparer, and they can literally get your taxes done in little to no time. Or you can get your taxes done, your own taxes, in little to no time. And guess what? If you're ever audited, everything is here. Everything is here. You have it organized. You have it categorized. You send this over. They even have it where you can blow up these receipts if you ever need to. I don't know if I can be able to do it from my phone. Yeah, from my phone, it looks a little weird. Look at that. It's zoomed in super a lot. Okay. But you get what I'm saying. You'll literally be able to, and now I can't get out of it. Hello. Let me see if I can get back in there. There we go. All right. But you'll be able to, y'all, your record keeping is going to be flawless.
Do one more, and then I'm going to answer the question. I see a couple of coins got.
One more what? Example?
One more example, just for one reason solely. So do an elite membership monthly expense.
Okay.
So go in there.
All right. Cashflow Manager.
Enter a new expense.
Okay.
All right. So select the expense type.
What will that be under?
What would it fall under? Your monthly membership. Your monthly MyEcon membership.
That's a good one.
What would that be under?
All right. Do
fees,
I need?
Okay.
All right. Yvette said fees.
That's not a bad one. you know, dues and subscriptions. That's what we were looking for. And I think we added that one. So it might say fees initially, but we added dues and subscriptions. So that's what we're gonna put it under. But fees is not a bad one. You can use fees as well, because it's just based on, you know, what you want to log in as and what you know, the IRS recognizes. Then for the date, say that, you know, the
Test
fee.
your knowledge. Test your knowledge on this one. Do you know when your MyEcon payment comes out every month? Because you should be planning for that, right? You should know when it comes out.
Or at least just having on auto drafts or where you just, you know.
Exactly.
I was usually like mid-month. But you can put any date in. So just so we don't
Okay.
take it, you can keep it on this date.
Okay, so
Today.
let's put that in. Set.
All right, amount. We're doing it for the Elite Business Membership. So that's gonna be $54.95. If you got the Elite Business Membership, which we highly recommend, you get the full thing. Who did the payment go to? If you're paying them dues and subscription, your monthly membership, what will go in the who section?
What goes in the who? Bree said MyEcon.
Boom.
Absolutely.
All right, what goes in the what? What makes this tax deductible?
There y'all go. Y'all typing fast too.
What goes in the what? Membership fee. That's good enough. Let's type it in. Now, this is what I really wanted y'all to see. As for the where, because this was paid, usually auto draft, what would you put for the where in this?
Right.
Type that in the comments. What would you put for the where? And I'll let you know what I put for the where.
And just guess, y'all. No answer is bad. We understand that this may be completely new. Somebody said MyEcon headquarters address. Okay.
Two people said MyEcon headquarters. Okay. MyEcon.
Anybody else? Anybody else want to take a stab at it? Online auto draft.
Boom.
There
That's
we
what we're
go.
looking for. So online is what I typically put. If it's an online expense, then I typically just put online. And I usually don't type in the whole entity's address. I usually just do the city. IRS, I'm sure would like the whole address because, you know, they want to make sure that that company, because truth be told, this record keeping game is really to hold everybody accountable.
Absolutely.
If the companies are recording all of their income and business owners are recording their expenses, it should be some cohesion there, some alignment there. But you can just put online, or you can just put the city. If it's in Little Rock, I put Little Rock. If it's in North Little Rock, I put North Little Rock. If the expense took place in Mapleton, Georgia, that's what I'm putting. You know, so just kind of get into practice and the habit of where. But online expenses, I just put online. If you bought something from Amazon, the who is Amazon, but the where is online. Then you take a picture of the receipt. That's the main thing I wanted you to see.
Hold on.
And then you can go down to the very bottom.
Hold on. Let's do this. Let's do this.
Okay,
Let's do this thing. Now, let me tell y'all, every time you make that payment, MyEcon system sends you a message. Check this one out on my MyEcon website. Your auto draft with MyEcon. And when you open that up, what does it say? Thank you for your continued enrollment with MyEcon. It gives you the date. It gives you the amount, right? You can literally take a picture of it. I got my flash on, but you see the point.
Now,
okay.
In case somebody wondering, the reason why we've been in MyEcon so long, the reason why hers shows up as 34 or ours shows up as $34.95, because we paid a year in advance for the Elite Business Membership.
Yes.
Paid up annually. So it shows up a little different than somebody who just purchased a regular Elite Business Membership. We pay for it on an annual basis because of when we purchased that particular membership. Because I know somebody like, why is $34.95? You just said make sure you got the $54.95. That's why we pay for the Elite and all the other you know, all the other perks in advance. Then the last thing will be the recurrences on the
you got notes.
Okay, yeah, you can add your notes, but you know, it's kind of that one is kind of simplified.
True.
And you know, no miles associated with online expenses. You can leave that blank. And then this is where you will put the recurrence in and put it as monthly. Save, confirm, and you're good to go. You ain't gotta say that.
All right.